Hello, friends. Uh, Hello, friends. Hope you all are doing well. In today's session, we are going to discuss regarding Ray Dalio's framework on the rise and decline of the economic empires, which has been detailed in principles for dealing with changing world order. It tracks a nation's trajectory using the aggregate index of around 18 interconnected objective determinants of power, which characterizes the strength of economies. This measures distinct components of national strength to evaluate whether a society is ascending or descending. In the particular book, they have mentioned the Dalio and his research team has synthesized 500 years of historical data into 18 quantitative gauges, and they are really very objective in nature if we see. The first one is about the quality of the education and the skill level of that population, which denotes the quality of learning, the human capital, and the workforce competence. Example, the number of engineers which are coming out of that country, the number of doctors which are coming out of that country, rather than people who are just focusing on the Instagram reels. The second one would be your inventiveness and technology. If you see the rate at which the innovation is going on, the research and development and the tech adoption in that country. Example, if we look at from China's perspective, while there is a lot of AI investment which is currently happening in the US, there is also a wave of trend from AI perspective in China, and we are trying to see how much of the AI facilities or innovation which is going to be coming from DeepSeek, which is the Chinese investments in AI. The other factor is about the cost competitiveness, the ability to produce goods and services at a very profitable and the competitive cost. The way and the level in which China produces the goods for the world is unimaginable and far lower than the way in which US had the ability very earlier years to produce the thing. The fourth one is about the economic output, the total size and output of the GDP. On this particular parameter as well, the gap or the difference between the GDP of China as well as the GDP of US has been shrinking on year basis. The share of world trade, which shows the dominance and integration within the global commercial trade networks. Uh, as of today, the number of countries where China has trade is much more than the countries and the volume of the trade which US has with several countries. So the dominance and integration of the commercial trading is highest at today for China vis-a-vis USA. The other important point is about the military strength, global force projection, defense capability, and security maintenance. While this used to be a biggest advantage which US used to have for several years, this is trying to come down on year basis. And what we recently saw is that the Lincoln ship had to go back, and the other ship or the other warfare ship which was there, at which is George Washington, which was there in uh, the South China Sea, has been coming, and it is now currently in the West Asia. So as of now, the South China Sea is not having the U.S. heavy ship in the waters, and it will be an interesting to see if China takes an advantage of this and has any repercussion on Taiwan's relationship. The other point is about the reserve currency status. Uh, as you can see, it's how the economic output and share of world trade, which where China is composing. The things are already in pipeline and in discussion as to can we make Chinese currency a reserve currency, or the central banks across the world are reducing the dominance on US dollars and trying to replicate and have gold as a base currency. So in this situation, there can still be a possibility that world comes and says that let's make some other currency as a reserve currency. And especially because of the above factors, whether military strength or the dependence upon a specific country for the military assistance is reducing, because there used to be a petrodollar arrangement, and even that is reducing now, because because when the countries needed USA assistance for the most, it was not given in a proper manner. Then again, the other factor is the strength of the financial centers and markets. There should be the depth, liquidity, and the global reliance on capital markets and banking hubs. If we look at it, it is again a parameter where we recently saw that USA is hitting $40 trillion of debt, which is, and the yield of 30 years borrowing has been increasing far significantly. So, and now when they are not going for more borrowings for 30 years, rather they are going for a borrowings of 10 to 20 years, which means that people or the investors are willing to lend, but lend for a lower term because they see high risk for a long-term investment in the US securities. This in turn will again lead to a reduction of financial strength for the US securities. The quality of governance and rule of law, which is your stability of institutions, legal predictability, and true corruption. This, again, in the current Trump regime, may become a laughable matter, uh, where you are slashed with the tariffs at whatever the percentage the government wants to introduce on a specific day. So again, there is no rule of law currently in place. The resources allocation efficiency, how effectively capital and resources are directed to the productive use. This is again a question which is currently challenged from USA's perspective, and the infrastructure and investments, quality of physical and digital structures supporting commerce. Now, when I said about the 40 trillion US dollars of debt, there is again an important parameter which we again have to look at it, which is this debt is coming at high interest cost, and this high interest cost is leading to around interest cost of $1 trillion year on year. And if we speak of $1 trillion, it is much more than the defense, which than the expense which USA used to incur on the Pentagon, which is their defense, or even for a Medicare. And when you are about to have such a high interest cost, which is expected to be doubled in next 5 to 10 years, in that case, you have to forego a money on, or your expense on the area which you could have added to economic efficiencies, thus reducing your infrastructure and investments. With the rise of AI, there is going to be an increase in productivity. With an increase in productivity, there is always an inequality of income. So the other important parameter becomes your gaps in wealth and opportunity and values. So degree of economic polarization between the rich and poor is increasing in the US market, which is not that of a case with the Chinese market, because of the very way in which they have developed. The other question which I said is again on the debt button, which is your total debt relative to income and capacity to service obligation. With this 40 trillion debt, this debt is around 120% or around 110% of the US GDP. So debt as a percentage of GDP is quite more for the US. And how they are thinking of again financing this debt is by printing money and monetization. There is an increased reliance on central bank monetization and currency dilution. We are again seeing a case where US would be going for devaluations of dollars, as well as again the case where uh, recently USA government or treasury had said that it is going to double the amount of the bonds buyback. It is again a measure by which they want to infuse more liquidity into the market, which would be used for buying the government securities. If we put it into a cyclical manner, then according to Dalio, these 18 indicators move in mutually reinforcing waves that create a predictable big cycle which lasts around 50 to 100 years. So there starts a rise which goes until a decline. The rise is generated by a strong leadership, inventiveness, education, a strong culture, good resource allocation, good competitiveness, strong income growth for years. They used to grow for double digit in a number of consecutive years. The strong market and financial centers. Then there comes the cycle of less productivity. Then there is an overextended debt. Then there is a losing competitiveness. Then there is a wealth caps. Then uh, in the complete decline stage where you see there is a very large debt, there is a lot of money which is getting printed, there are internal conflicts, there is a loss of reserve currency potentially, there's a weak leadership, and there is a civil war or revolution which can be expected in such markets. Hope you found this particular webinar useful. Thank you very much.